Welcome everyone. I think we're live. I'm sitting down today in London with Nick Bencino from Forex4Noob and Cryptos4Noob. How's it going, Nick? Just introduce yourself a little bit also.
I'm Nick Bencino. I'm from uh, what's that? Oh, all right. Yeah, I'm from Cryptos4Noobs, Forex4Noobs.com. I don't know what else to say. I'm a trader. Um, here on a podcast or a YouTube live.
Love it. A lot going on. So I was just checking the chat and everything. I had two windows open. So if you guys are joining us live, comment below in the chat. We want to hear from you as always. And the best live video are the one where you ask good question and you have good question for me or Nick, and that's gonna make it worthwhile for sure. So we want to do kind of a live today about a few different topic: forex, price action, cryptos, pretty much everything Nick knows about. So I want you to give. So you were in a podcast before that we did a couple of months ago, I think,
Yeah.
and you shared a little bit your story and stuff, how you started to trade. But tell people just a little bit about your trading style, kind of what you trade and how you trade it, just a little bit.
Well, I started off as my whole story,
Sure.
like
Or if
from
you
the
want to
start.
give a small
I,
snapshot,
I
whatever.
gave my whole story last time. I
Yeah.
don't want to bore people with like my whole trading history. So, hi Scott. I'm just gonna give a short version. I've been trading for 16 years since I was 15, and I'm 32 now. So 17 years. Thank you. I'm so bad with math, which is bad for risk management in trading. I think I'd be a better trader if I was good with math because then I'd be better at managing my risk. But luckily, I've got a very good friend who's an amazing risk management guy that helps me. Anyway, I'm getting off track. Point is, I've been trading for 17 years now. I trade primarily Forex. When I first started, like my first year was stocks, but that was the Australian stock market because I used to live in Australia. But I don't trade stocks, and I haven't traded stocks in a long time. That was just my first year. Uh,
A couple of your
Thanks,
fan in the
man.
chat, so that's great.
Yeah. Um, I don't know how to say your name. I'm sorry. My eyes are bad, so it's a bit too far away to read your name. But thanks. I'm just gonna say Abby. Thanks, Abby. Uh, yeah. Where was I? So I've been training for 17 years. I started off first year stocks, but wasn't really my thing. Got into Forex. I've been trading Forex ever since. Now I've started trading cryptos too. So I'm mixing up cryptos and Forex, and yeah, it's kind of fun. Cryptos are cool because they're like Forex was back in 2008-ish. 2008 Forex was I was actually talking to you about this in the restaurant. So
Yeah.
if anyone wants to see something cool, go to GBP JPY on pick the biggest candle you've seen this week or this month, daily candle on GBP JPY. Put a line at the top, a line at the bottom to measure. So a line at the top of the candle, line at the bottom of the candle, measure how many pips there are between. Then go back to 2008 and see just how small that candle looks in comparison to what candles were like in 2008 on GBP JPY. And that applies to pretty much every pair. But GBP JPY was the biggest mover back then. Cryptos are like GBP JPY was in 2008. Cryptos today, which just makes them really exciting because those were like my best years of trading. They were like I think back to 2008 trading, and I think those were the good old days when you could take a trade and come back and you already made like 3 or 4% in just one trade in like 10 minutes
Yeah.
because it just moved like crazy. I once took a trade, stepped away for 3 minutes, not even, it was under 5 minutes, come back and bam, it's gone up like 500 pips. It That's GBP JPY trading back in
Yeah.
2008. And that's what cryptos are like today.
But I feel like this can be dangerous for some people, or maybe
Ooh,
maybe
yeah.
scary for some people to
Yeah,
jump
yeah.
into cryptos where they move so fast
Yeah,
and you don't know
yeah,
what to
yeah,
do.
definitely. Uh, you need to know what you're doing.
Yeah.
You
Yeah.
don't want to. The thing is, like, what I like to say is volatility is good if you know how to manage your trades, if you know how to manage your risk. You don't want to be trading like 5% of your account when
Mhm.
markets move like that. That's insane. You could like wipe out your account in one trade if you're not careful. So you need to be smart with it, of course.
Yeah. Yeah.
You need to do it properly.
Of course. Of
So it's
course.
exciting. Volatility is exciting if you know how to trade. It's bad if you're taking way too much risk.
Yeah. So I know you as a kind of price action trader trading on mostly higher time frame in the forex market. You're, I think, looking at zones in the market to trade from.
Yeah, support resistance
and
areas.
again price action with those. And so, how did you adapt that trading style to cryptos? Is it the same thing or different?
It has a lot of the same elements. So I will use support resistance areas a lot. I'll use like what I'm known best for is candlestick analysis.
Mhm.
So I use a lot of candlestick analysis. That's really pretty much my. I can't look at a chart without analyzing the candlesticks. Like if I look
Mhm.
at a chart, uh, my mind immediately goes to price action, buyers, sellers, who's in control of price, that kind of stuff. That it just like
Mhm.
immediately goes to that. So when I look at a crypto chart, I can't really trade in any other way. I have to trade the price action because I've been doing it for a long time now. And then
Mhm.
so it is price action based, but there are a few differences. I'll trade mostly lower time frames on cryptos.
Okay.
So looking at like 1 hour charts, which I'm not usually going to do. In Forex, I'm mostly about 8 hour, 12 hour daily charts. Um, it's just really, I don't know who to look at
Yeah.
because I'm talking to you, but I'm talking to them. So sorry if I'm not looking at the camera, guys.
Talking to everyone, it's like a group chat, so it doesn't
Yeah,
matter. Yeah,
I'm
you guys
like trying
are.
to look at the. All right, sorry. So yeah, I'll trade mostly 1 hour charts and
Mhm.
cryptos. I try to mix it up because I'm still very much developing the strategy.
Mhm.
Uh, I haven't posted it on my site yet because I don't like to share a strategy unless I've tested it
Yeah.
thoroughly and I know it works. So I haven't shared it yet because I'm still kind of like tweaking things. Like sometimes I'll do 15-minute chart trading
Mhm.
for cryptos. Sometimes I'll do 1 hour chart trading. I'm trying to find what the best thing is. But it's all really exciting because trading these lower time frames, it's kind of like a bit of a different experience for me, especially in a market this volatile.
Yeah.
It's it's not a lazy style of trading. Like
Mhm.
you do swing trading,
Yeah.
and I
Yeah.
primarily most of my trading is swing trading on Forex. So that's a kind of laid back, lazy style. You can take a trade, but with cryptos, you have to be on the ball.
You're
You,
right.
you
You're right.
have to be there, and it's exciting. Your heart starts pounding sometimes.
Uh
Like literally, I've had times where I'm in a trade and I can actually feel my heart beating because like there's so much happening and you have to make decisions really quickly.
huh.
It's exciting stuff.
Nice.
It's exciting.
So I think this is going to be a good lesson for people either who are new to trading, they want to come up with their strategy or something. How did you decide to go from forex to cryptos? Was it kind of a like an idea on one day, then you went to cryptos, or how did you develop your strategy to trade on cryptos?
Well, first of all, cryptos, like when I first heard about cryptos, I was just like, I wasn't even sure what it was. I didn't really
Yeah.
get it. And I was just like, it doesn't sound like something that's gonna last a long time. Uh, and eventually, uh, one of my friends who has been into crypto since 2010, 2012, something like that. He kept like annoying me about it. He kept saying, because he knows I'm a currency trader, but he's not a trader. He doesn't know anything about trading. He's like, why don't you trade cryptos? And I'm like, I can't be bothered. He's like, no, but I've heard people are trading them these days, blah, blah, blah. And he kept like asking me about it. He's like, hey, take a look at this chart. What do you think? So I started looking at it. And when I saw a crypto chart, I was like, whoa, this is like the price action was just so. You're a price action trader. Sometimes
Yeah.
when you look at a certain pair, right? It's just everything is clear.
Yeah.
Everything
Yeah.
is easy. You look at a pair like GBP New Zealand, for example, that's a mess. That
Complete
pair,
mess. Yeah.
it's just like there's wicks everywhere, and you're just looking at it and you're like, I can't trade this. Like, it's
Hmm.
just too messy. But then you look at a pair like USD CAD, for example. USD CAD's like, it just moves so nicely, it trends so nicely. When I look at a USD CAD chart, I'm like, okay, I can trade this. That's easy. That's like the price action is so apparent and easy. When I was looking at Bitcoin USD, I was like, whoa, this is like you could just see the support resistance areas, and
Hmm.
it was just so simple. So as soon as I saw that, I was like, awesome. And I started trading my normal strategy on Bitcoin. Works pretty well, but I just felt like there was too much news impact on cryptocurrencies. So
Hmm.
like you get some random dude, like a CEO of a big company, saying, "Oh, Bitcoin is a scam. It's gonna they're gonna steal your money." Like saying something completely misinformed that they
Yeah.
don't know what they're talking about, but they'll just say it, or Bitcoin's a bubble, or whatever. And then Bitcoin would crash because some famous person in the financial industry has said that. So like trading my normal strategy where I'm on a like 8 hour, 12-hour chart trade, where I'm holding that for like a day or two, when one of these guys comes out and says something, boom, it goes against me. So I found that the longer time frames were not the best for cryptos. Where the shorter time frames where you could get in and out in a very short amount of time, where you don't have to worry about if I hold this overnight and some random person who's semi-famous says something bad about Bitcoin, it's going to go crash.
Yeah.
Uh, yeah, so I adapted my strategy to trade on the smaller time frames. Uh, and yeah, I mean, it's been like around a year now, something like that. I'm not sure.
Nice. And I think that's a good example of kind of adapting yourself to the market to trade and the instrument to
Yeah,
trade, because you could trade the same thing on different like pairs or whatever, different, I guess, markets, but it's not gonna be the same thing necessarily, which is a good
yeah.
example of that, I think.
I've been trading futures too, like been dabbling in futures for a while. And that's again, you have to adapt to
Uh
futures
huh.
because they have an open and close time. So they're not open
Right.
24 hours a day like Forex. So, you need to adapt, you need to change your strategy slightly. You can still do price action, just implemented in slightly different ways. And I think it's
Mhm.
a thing that comes with experience. Once you've been trading long enough,
Yeah.
you see how you need to adapt to a different market. But I think for a new trader, it might not be as easy.
Mm-hmm. One of the things we talked about, and we have a few comments we'll answer in a couple of minutes, I guess, after. She has a new question, comment in the chat as always. But one of the things we talked about earlier is the fact that there's all these cryptocurrencies you could trade, like all these possibilities,
Mm.
but that they are not pretty much correlated all to Bitcoin.
Yeah. So go back like 3 months,
Uh huh.
maybe a bit longer. When you were trading cryptos, you could trade Bitcoin, Ether, Litecoin. Uh, what's the other one? Dash. There was some Dash trading that you could do, and they weren't that They were still correlated to Bitcoin, but they would sometimes move in different directions or move slower, move faster. But lately, the last few months, they've all just like fallen in line. If you with TradingView, you can overlay on charts.
Yeah.
So if you overlay, there's hardly any difference between Ether and Bitcoin. They move in the exact same way. So for some reason, lately, cryptos have just become very correlated, where to the point where it's only really worth, in my opinion, trading Bitcoin USD as opposed to trading the others, because Bitcoin USD and all the others are going to move in the exact same direction. Just Bitcoin is going to move more. So
Mm-hmm.
there's more potential for profit on Bitcoin.
Mm-hmm. And I want to get a little bit into kind of the technicalities of it, like the small details. And so we talked about a platform a little bit earlier. You're using, I think, TradingView mostly for trading Bitcoin, or at least looking at the chart.
Yeah, looking at the chart, I don't trade through TradingView, but
Uh huh.
looking at the chart, TradingView is just I mean, you use
Yeah.
it too. It's
Of
like
course.
the
Of course.
best
Yeah.
charting
Yeah.
platform
Yeah.
out there. I don't get paid by TradingView to say
No.
this, right? I don't know the guys at TradingView. I just honestly think it's the best trading platform, charting platform out there. Trading wise, it's not the best. It's okay for trading,
Yeah.
but like you could get your more like advanced platforms for taking trades,
Yeah.
executing
Yeah. Yeah.
trades
Yeah.
that have like advanced features like Dukascopy, which is a broker that I use. I can't trade cryptos through Dukascopy, but I'm just giving an example.
Mm-hmm.
They have a lot of advanced order features, good till close, good till a certain time where you can set expiration on orders. You can't do that with TradingView. At least last time I looked at their trading options
I
and
think
everything.
it's funny. I think they added that function a few
Oh,
weeks ago, but
oh,
I don't think
nice.
it's
That's
possible
cool.
for all brokers. So
Oh,
maybe
right.
something to look into. Yeah.
Yeah, that's a cool thing about TradingView though. They're always
Uh huh.
improving,
Uh huh.
always adding features like that feature we were talking about at lunch,
Yeah. Yeah.
the flagging of the pairs.
That's a big
So
one.
good. Oh
Yeah.
my god,
Yeah.
so good.
Yeah.
Anyway, so the technicalities, right? So I'll do TradingView for looking at Bitcoin charts. I look at all cryptos, but primarily Bitcoin USD. Hey, Tally, how you doing? Uh, so yeah, Bitcoin is primarily what I focus on. I look at it on TradingView. Broker wise, I'm still experimenting with different brokers. I think it's safest to go with a Forex broker that offers cryptos, uh, simply because Forex brokers are regulated. If you go with a crypto only broker like BitMEX, Bitfinex, like there's a lot of options. Yeah, someone's asking about BitMEX actually.
Yeah.
So yeah, if you go with like a broker like BitMEX, for example, uh, or I don't know, who are the other ones, George? Yeah, Kraken, that's a good one. Um, they're good brokers and they have like good platforms and all that kind of stuff, but I just don't trust putting money with them because they're not regulated. And they're running out of some like random country. They have no
Yeah.
regulation. Am I going to send you £20,000? Like, what are you going to do with that money? What if I turn that 20,000? Because the returns on Bitcoin trading, they can be good because it moves so fast.
Mhm.
So like, let's say I put just I'm not saying these are the numbers. I'm just giving like a random example of a number. Let's say I put 50,000 in with BitMEX.
Uh-huh.
I turn that 50,000 into 150,000.
Yeah.
Right. I'm not saying I can do that in a week. I'm just like saying, for example, right? So they now owe me 100,000 that I didn't give them because I've made that money through them. Are
Mm.
they going to pay me that money?
All right. Yeah.
Maybe,
Yeah.
but I don't know. They're not regulated. And if they don't,
You can't
who,
do much.
who do I go to?
Yeah.
No, I have no, like, I can't report them to the FCA. That FCA is the UK Financial Conduct Authority.
Uh-huh.
So I'd rather go with a forex broker that provides cryptos because at least they're regulated and they have a reputation. They've been around for like most of them 10 plus years, regulated by the FCA. Their crypto side might not necessarily be regulated because a lot of these brokers these days, forex brokers, like Plus 500, for example, they're regulated. Correct me if I'm wrong, George. George is a friend of mine who trades cryptos with me. He's behind the camera. But I think Plus 500 is regulated for currencies,
Uh-huh.
but for cryptos, they're not regulated by the FCA. So it's still technically unregulated, but a company like Plus 500, it's a big broker. They have a reputation. If they start scamming people who are trading cryptos through them, it's going to be bad for
Right.
business. It's going to be bad for the forex side of their business, for everything. So I trust having, trading for a forex broker more.
Uh-huh.
Long answer to your question, but yeah,
And so cryptos, I guess, is gonna be like Forex, where you have all these different brokers with different kind of exchanges, right?
yeah,
So are there better than others? Like some where they have more liquidity, some where they have less liquidity,
yeah.
or
I find there's more liquidity in the crypto only brokers, to be
okay,
honest.
okay,
But I don't, like I said, I don't like trading with them.
for the
So
risk, okay,
yeah,
yeah,
it's a bit too risky. But Plus 500 is a good crypto broker. Decent. eToro does cryptos, but not a fan of eToro.
hmm,
I don't like their business practices. I'm just not a fan of eToro. Um, but yeah, Plus 500. There's quite a few. I'm testing a lot. I'm also testing crypto only brokers. I do like BitMEX. BitMEX, I don't necessarily trust them because they're not regulated, but they are a pretty cool broker. What was the other one? Struggling to remember the names. There's so many of them.
yeah.
But
Feel the
I
same way.
I don't have a favorite at the moment. But if you are interested in trading cryptos, I do suggest you probably go with a forex / crypto broker because it's going to be safer, in
Nice,
my opinion.
nice. And so we have Marcus, one of your students watching. So wonderful. Welcome, Marcus. Showing some support. That's great. So once we've done that,
Oh, hey Marcus. Yeah,
I guess, do we have other things to look at in terms of chart? Because for the longest time, like Bitcoin has been trending a lot upward,
yeah.
and so most people were looking to buy unless they make money fast.
Mm.
Now it's kind of a different environment. So do you look at trading both ways or only one way?
No, definitely both ways.
Okay.
That's the best thing. Like when I first started trading Bitcoin, like you said, it was just going up, 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 and that's cool and all, but as a trader, we have like the ability to make money when things go
Yeah.
down. And it just felt like a very weird and unnatural market to me at the start because like I would see short opportunities and I'd take a short, but it just wouldn't last. It would just turn around and start going back up. But now at least it's going down again and we're starting to see like actual real possibilities of proper trading where you could take a short. It adheres very well to support resistance areas.
Hmm.
So you'll get it break through a support resistance. You'll get it break through a support area when it's trending down, come back up, tap that support area, which is now resistance because it's come below it.
Okay.
And then it'll just go boom and it'll fall down. So you have a lot of those kind of like common continuation type
Uh-huh. Uh-huh.
trades that you can take. It's getting like it's becoming more and more like a real tradable thing. So when a lot of people are sad that Bitcoin's falling now and has gone below
Yeah.
10,000. But to me, it's just awesome because now I can like trade it as if it
Yeah.
was a normal pair. And yeah, so yeah.
That's pretty cool. Okay. I like it. And so, yeah, we have a couple people watching. I think some good question, which we'll get to, I think, in a couple of minutes or maybe now. But one thing I want to hear about, and I think I've asked you this many times before, which is you look at candlestick and you do candlestick analysis. I only look at candlestick as setups for some setup I have with candlesticks. But how do you look at candlestick and analyze them? What are the steps or things that you have to go through?
Uh, I look at candles as a story, right?
Uh-huh.
So price is always moving up and down, always up and down, because it's the price is essentially the struggle between bulls and bears. Bulls trying to push price up, bears trying to push price down, or you could say buyers and sellers, whatever you want to say.
Mm-hmm.
So there's this constant struggle, buying, selling, buying, selling. It's order flow essentially. Candles are basically a story. No, I'm explaining this badly. Order flow is happening, but if you were to look at order flow, it would just be numbers.
Mm-hmm.
Like it's just numbers. You could plot it on a spreadsheet and it would just be numbers up, down, orders coming in. But candles allow you to kind of visualize those numbers. They allow you to read the story of what price is doing. So I approach reading candles as a story. So to me, when I see a big bearish candle with no wicks, the story that's telling me is bears are in control of price. Bulls have nothing right now.
Mm-hmm.
Bears are in complete control. That candle started up here, no upper wick, ended down there, no lower wick. For the whole time this candle was alive, the, when I say alive, if it's a daily candle, it was alive for 24 hours. Uh, so I kind of say a candle is born and then it dies.
Mm-hmm.
And everything that happens in that candle's life is a story of that candle. So the story, if you look at that as a story, then you can kind of start to understand or predict what's coming next, right? So
Mm-hmm.
if you see a big bearish candle, no wicks, you say to yourself, well, for that day, bears were in control of price. Price pushed down. Now, what's likely to happen in the next candle? Is that likely to continue bullish?
Yeah.
Probably.
Mm-hmm.
Like not every single time, of
Yeah.
course,
Uh-huh.
it can turn around, but likely that story is likely to continue bearish for a little bit of time at least.
Mm-hmm.
Might turn around in that candle's life. So when I look at a chart, I just kind of see a story there and I read the story. And then when I'm reading the story, I predict what's going to happen next.
Mm-hmm.
And the only thing I use after that is support resistance areas because it helps me predict what's going to happen next.
Mm-hmm. And
Yeah.
how far do you go back in time to look at those candles? Because I feel it's easy to go back and try to find too much evidence, like go through all like 10 years of data or stuff.
Recent data is the most
Okay.
important. Recent data, last day or two,
Okay.
most important.
Okay.
I look back further. Like if I want to analyze, if I want to see what's trending, obviously to see what's trending, you have to look back a few
Mm-hmm.
weeks to see like a trend. But the only data that concerns me is the last 24, 48 hours. That's really what I look at if I want to make a trading decision. If in the last 24 hours, if we've gone from a bearish trend, but then in the last 24 hours, that bearish trend has slowed down and the last candle, the 24-hour candle has gotten really small and it's sitting on top of a support area. We went from I wish I could show you my charts.
Mm-hmm.
So we went from a bearish trend, it's hit support, and now it's turned into a little tiny small candle.
Mm-hmm.
So what the story that we're seeing there is sellers or bears in control, in control, in control for 5, 6, 7, 8, 9, 10 candles. Then on the 11th candle, they stall and they're not going down any further. And they happen to be stalling on top of a support area that we've placed beforehand. So what is the story likely going to become from there? I usually say there's a high chance that it's going to reverse. So
Okay.
that's where I would take a reversal trade generally. There's more to it than
Yeah.
that. I
Yeah.
mean, it's hard to explain things without a
Uh-huh.
chart.
Uh-huh.
But continuations are generally more powerful, especially in cryptos. Actually,
Uh-huh. Uh-huh.
continuations are generally safer trades. Reversals are cool. I love reversal trading, trading against the trend. Everyone says you should never trade against a trend. I
Yeah.
disagree.
Yeah.
I think you can make profit trading against a trend. You just have to manage your risk. You just have to do it properly.
Right. Right. And then what's happening after? So once you find a setup, let's say with this, how are you gonna take profit and put your stop loss? Is it gonna be automatic, like the same thing all the time, or varying from time to time?
I vary it. It
Okay.
depends on a lot of different factors. I think having the same approach to every single trade is it's hard to say it's not viable, because when I say it's not viable, I mean it's not viable for me.
Uh-huh.
But I'm sure there's traders out there who do it, have the same exact stop loss on every trade, and they make it work. But for me personally, it's not viable to have the same approach to every trade. Every trade's unique. Every story is different, let's say. So you need to adapt slightly to every trade. Uh, Now, the adaptation is not going to be huge. I still have a general set
Mhm.
of rules that I follow. Um, but yeah, I do adapt to every trade. My stop loss is usually behind barriers. So a barrier
Okay.
would be something like, if I'm taking a short trade, a barrier would be behind resistance area, behind recent highs. So if you find the highest point it's been recently, that would represent a barrier to price, because recent highs, because we're taking a short trade, right?
Hmm.
So this is the highest point it's been in a month. If I put my stop loss above that, it's harder for price to get above that high. So
Right.
it gives my stop loss some protection. So my general rule is put your stop loss behind barriers and put your target out in the open.
Okay.
I have an analogy for this, a mountain analogy. If you're out in the middle of
Yeah.
a field, you're lost, right? You're out in the wild, you're lost. And this way, there's a huge mountain like Mount Everest. And that way, there's like just a grassy plain that you could
Hmm.
walk across. What way are you going to go to get to safety? You're not going to
Yeah.
climb Mount
Uh-huh.
Everest. You're going to go the easy route.
Right.
And that's how I view charts. When there's barriers in the way, like a big mountain, like a resistance area, like recent highs, price is less likely to go in that direction. It's more likely to take the easy route. So I like to place my targets on the easy route and my stop loss behind barriers.
That's a great example. Love it. Love it. That makes a lot of sense. I think I want to get to the question. We have a few good, well, many good questions, I should say, from different people. We have one about risk management. So this is a noob. How do you manage your risk in cryptos? And I guess in
Uh,
anything you trade.
Managing risk in forex is a lot easier. First of
Okay.
all, one thing I do. This is just like a primary rule I have for risk management. I have three categories for my trades. So I have risky trades, your average normal trades, and low risk trades. So this gets a little confusing just because of the terminology. But high risk trades, they're trades that I think might not work out, but I want to get into anyway because for whatever reason I want to trade it. But because that trade's riskier, what I'll do is I'll risk less of my capital on it. So let's say, for example, I risk 1% on your average trade. 1% on my average trade is what I would risk, just for example. On a risky trade that I think I think it might be risky, but I want to take it, I might risk 0.5% of my capital. But then I have also the other category that I was saying was easy trades, trades that I think have a high chance of working out, high probability trades. Trades like that, I'll risk a larger portion of my capital. So I might risk 1.25%, 1.5%, something like that. So, yeah, first of all, that's how I start off managing my risk. I assess a trade. I decide how risky is this trade, and based on how risky the trade is, I'll uh, I'll trade a certain amount of my capital on that trade, my trading capital, my account, whatever you want to call it, on that trade. With cryptos, risk management is a bit trickier, simply because they can swing quite a bit. So with cryptos, what you tend to have to do is implement wider stop losses. Your stop losses need to be pretty wide on cryptos. Uh, I'm on Forex. I tend to have pretty tight stop losses. If you compare me to most traders, my stop losses are pretty tight. But it just wasn't viable in cryptos. I tried it, but my stop loss would be hit way too often, and then it would go in my direction. So with cryptos, you have to focus a lot on having wider stop losses, uh, wider targets too, which is always nice. You just get a lot more movement, a lot more swinging. Um, you have to learn to assess which trades are high probability, which trades are your average trades, and which trades are low probability. Your low probability trades risk less of your account on them, because, or just don't take them. If
Yeah.
if you want to manage your risk very well, don't take low probability trades. Only take average and high probability trades. Yeah, so there's a lot of ways to do it.
Yeah. And do you have some sort of checklist for that? What is high probability? What is, let's say,
Yeah,
medium, and what is low? Or is
I
it all in your head?
no,
In
I have
code?
a checklist. I've
Nice.
actually built an app.
Nice.
It's on the cryptos4noobs.com website. There's a checklist app. Uh, I'm trying to get it developed as an Android app too because
Yeah.
I trade from my phone a lot these days.
Okay.
Uh, so it's going to be easier to have on my phone. But yeah, I have a kind of a generic checklist, and the checklist I call it a tick list, TIC, trade initiation countdown. So essentially, this list it it's just a few questions, and I tick them off as I go,
Okay.
and then they allow me to assess my trade.
I like that. Do you do this all the time? Because some
Yeah.
people have checklists, but they don't go through them all the time. They feel like, oh, I know
What's
the
the point of
checklist,
them
I'm
then?
good. Yeah. Yeah. So you go through them all the time, step by step?
Yeah.
Okay. I like that.
Trading is like you have to be disciplined to be a trader. Um, I was saying to you, I listen to a lot of podcasts. I listen to
Yeah.
podcasts from this guy called Jocko Willing, the ex-Navy SEAL, cool guy,
Uh-huh.
inspirational type guy. And one of his quotes that he's famous for is "discipline equals freedom." And I
Nice.
believe that discipline equals freedom. If you're disciplined, then you are going to be a better trader. And part of discipline is using your checklist. If you have a checklist and you only use it one out of every two or three trades, why have the checklist? I mean,
Yeah.
if you have a checklist, use the checklist. If you have a trading plan, stick to your trading plan. If you have a risk management plan, which you have to have, stick to your risk management plan. Discipline equals freedom.
I love that. That's a good example.
Yeah.
Yeah. We have a
Thanks.
question from Gregory. And I know a lot of traders, especially in stocks, I've seen this, where they look at the volume. They say they want to buy a breakout or buy sell a reversal, whatever. They use the volume to decide whether to enter the trade or not. If they have a high volume, they're gonna enter.
Yeah.
Do you use that for your trading in cryptos or
No,
something? No.
I honestly, I don't. There's no central market in
Yeah.
cryptos.
Yeah.
So with stocks, you can volume trade
Exactly.
because there's a centralized exchange for stocks. Uh, Wall Street, New York, and NYSE on Wall Street. So because all the orders are going through one place, you can get like an easy idea of volume. With Forex, there are a lot of volume indicators, but I don't think, at least as far as I know, and as far as all the research I've done on them, but I haven't looked into it in the last few years.
Yeah.
So things may have changed, but there's no central exchange for Forex. That's true. Like that, of course, I know. No central exchange for Forex. So there's no way to assess volume properly in Forex because it's not all the orders aren't flowing through one place.
Hmm.
Then we can't get an accurate representation of
Yeah.
volume. So the volume that you get in Forex is usually per broker. So you could have a broker like eToro, for example. That broker is like full of newbie traders.
Hmm.
Most professional traders, sorry if there's any eToro traders here, but most professional traders aren't trading through eToro. So if you're looking at volume through eToro, I wouldn't say that that's
Yeah.
valuable information because it's not the volume of like experienced trade. It's not the order flow of
Yeah. Yeah.
experienced traders.
Yeah.
It's the order flow of inexperienced traders. Um, so I don't really put too much stock in volume in Forex or in cryptos because there's no central exchange,
Uh-huh.
so we don't get a good idea of order flow.
Okay, see, I think I've heard some traders say they use volume in Forex for some reason,
Yeah,
but I never got my head into it. I never got to use it. But if you guys use volume or for whatever reason, comment below. I want to know for
I could be
as a
wrong. Things could
question.
have changed because I haven't really looked
Yeah,
into volume in Forex in the last few years. Maybe there's some volume indicators these days that take volume data from a ton of different brokers and they combine it all. That might be a useful tool because then you're getting like an idea from a lot of different sources. Uh, but yeah, as far as I know, volume in Forex is not that great.
yeah, yeah.
But I'd be happy to be proven wrong.
Of course. Great question from Abby here. Do you ever face a losing streak? And I guess the follow up question
Yeah.
that's gonna be how do you handle them?
Losing streaks are normal in Forex.
Yeah.
I don't handle them. I just go through them. Um, I have basically uh, there's a whole mathematical side to trading. I'm not a good math guy, but some of my students are good math people, and one of them in particular has done a lot of the mathematical side of trading. I don't remember the numbers exactly, but George, could you go onto the Forex for Noobs course and go to the losing streak calculator in the mastermind tools section and tell me what the average losing streak for 50% would be. We'll get that number in a second. Basically, so losing streaks, if you have a 50% win rate or a 60% win rate or a 70% win rate in Forex, you're going to go through, statistically speaking, a losing streak of X amount of trades, which I'll tell you in a second. So that losing streak is perfectly normal. That losing streak would happen not just in Forex. It would happen if you're flipping a coin. You're going to get it's going to land on heads 6 times in a row over the course of 1,000 flips. That's just normal. Or maybe 7 times, maybe 8 times in a row. So losing streaks just come down to probability. It's thanks. Not sure if I show this to everyone, if they'll be able to see it, but I'm not sure people can see that.
Sure. Gonna be a bit hard
I'll just read it out. It'll be easier. Right. So this is probability mathematics. With a 50% strike rate, so a 50% win streak, you win 50% of your trades, which is low, but let's just say that's the number. Over the course of 100 trades, it's statistically normal to have a losing streak of 7 trades. So we'll change this to, all right, let's say 65%. So with a 65% strike rate, on average, you're going to suffer 4 losing trades in a row. You're going to have a losing streak of 4 trades, but you could have up to 8 trades in a row. So this is just statistical mathematics, probability mathematics. Thanks. And so my point is, losing streaks are normal. It's just something that happens. If you're trading and you have a 50%, a 60%, a 70% win rate, it's normal to lose 3, 4, 5, 6 trades in a row.
Yeah.
So when I'm in the middle of a losing streak, I'm just like, this is normal.
Yeah.
Like I just keep trading because I know that next month I might have a win streak of 6 trades in a row, and I'll be like, yay, I've won 6 trades in a row. Awesome.
Yeah. And you have no reason to feel bad or that you feel like you're a loser because you have 6 trades or 7 losing trades in a row.
No, it's just normal. It's just, that's trading.
Exactly.
It's the reality of trading. You are going to, I think we were talking about this over lunch. I think like Western civilization. So like, you know, America, the UK, all these countries where our economy, our countries are based on capitalism. And I'm not saying there's anything wrong with capitalism. I'm just saying capitalist places that it's all about winning. You want to win. That's like what we're programmed to do from when we're kids is win. And we feel bad when we lose.
Yeah.
But you kind of got to tweak your mindset when you come to trading. Trading is not about winning. It's about being profitable. And they're 2 different things. In trading, they're 2 different things. You can be profitable as a trader, winning only 40% of your trades. You can be very profitable. I know a trader who wins 30% of his trades, but he's still profitable. So he loses 70%, but he's a profitable trader. So what that trader has done is he has accepted that losing is a part of trading, and he's happy to lose because he knows at the end of the year, he's still going to make money. So the win for him is making money. It's not about winning trades. So you just got to accept as a trader that you're going to lose trades. Sometimes you're going to lose 5, 6 trades in a row, and it's nothing wrong with you, nothing wrong with what you're doing, nothing wrong with your strategy. That's just part of the game. And once you're willing to accept that you're going to lose as a trader, and once you're willing to not care about losses, that's when you become a good trader. That's when you kind of break through that barrier and you become a good trader. So you really need, and it's hard because our whole society is based around winning, being a winner. But you just have to accept that trading is not about winning. It's not about being right. It's about being profitable.
Yeah, love that. That's a great analogy for sure. And another thing we were talking about also is the fact that you have some friend who trades some big money, and they are willing and able to have losing years, and they don't care.
Yeah, losing. Yeah, I know some people who trade like they trade other people's money, so they're doing managed accounts, managed funds. Like, but I'm not talking about like some random website that's like, I'll manage your 500 pound account. I'm talking about people who are managing like minimum million. So each of their customers is doing minimum of millions. Point is, some of these people, they have like losing streaks of 3 or 4 months. one guy, this guy is not my friend, but I've seen his result. I know I know of him. He had a losing streak of 1 year, one whole year, but he just kept on trading. He just kept on trading. And I've never had a losing streak of a year. I'm honestly not. I talk this thing about like you have to be willing to accept losses and you have to be willing to lose as a trader. But I'm honestly not sure how I would handle losing for a whole year. I think I think that might. I'm not sure if I'll handle that
Yeah,
well,
yeah,
to be
yeah, yeah.
honest. I
Same
think
for
I
me.
might start doubting myself. But there are traders out there who are willing to lose for a whole year
Yeah,
because they know that their next year is going to be profitable.
and
It's
I
weird.
guess that comes with the experience and the years of learning and knowing what
Yeah.
happens and that you can recover.
Yeah, yeah.
Also, yeah,
It's just like experience, yeah.
I love that. On a similar topic, speaking of lunch, before Archer wants to know who has the best pizza in London.
Pizza,
Piccolo Romano, Roman Road. That's the best pizza.
Piccolo,
Piccolo Romano.
Piccolo, Vicolo Romano.
Yeah.
My parents are Italian, so I speak Italian. It's not Vicolo, Vicolo Romano on where?
Roman Road.
Roman Road. I'm not from London, by the way.
Yeah,
I live up north. I'm just down here for the interview.
nice.
So,
Archer is in Belgium, if I'm not mistaken.
oh, you're
That's
in
pretty
Belgium.
cool. Yeah,
My girlfriend's from Belgium. She's from Ghent. I was just in Belgium actually for the weekend. It was pretty awesome.
I'm mistaken. Yeah, cool. We had a question, and this is good. This is a good topic about patience, and I kind of lost the question. Yeah, can you talk? This is Ade. Can you talk about patience in trading and not moving your stop loss?
Patience is like one of the most. When someone asks me what's the most important trait for a trader to have, my answer is always patience.
Nice.
It's the most important trait for a trader to have. Being patient is going to, if you learn patience, you're going to be a better trader. I'm a very, very patient trader. I didn't start off a patient trader. It took a while for me to develop patience in trading, but I am now a very patient trader, and it constantly saves me money. Uh, I have a forum where people share trades essentially, and I'll notice that a lot of the new traders, they'll share a trade on, let's say, Euro USD, and I'll be like, I'm going to wait for the daily. I want to see this trade form on the daily. I don't want to enter on the 4 hour chart because I think that's going to be entering too early, too fast. Uh, but they'll all enter on the 4 hour chart, and then the trade will fail. But me waiting for it on the daily, the trade never develops into anything. So I wouldn't have entered that trade because I was patient enough to wait on the daily. So there's that aspect of trading, like being patient and letting a potential trade develop to see if it actually turns into anything tradable. That's one side of patience, but also patience of not moving your stop loss.
Yeah.
That's a tricky one because there are certain situations when moving your stop loss makes sense, but usually it's tightening your stop loss. You never widen your stop loss.
Yeah.
That's
guess
always bad.
Yeah, I guess some people have different problems. Some people want to move the stop loss too fast in the right
Yeah.
direction, and some people just want to move it back to avoid a loss. So
moving it back to avoid a loss, there's almost no situation where it
Right.
makes sense to move
Yeah,
your stop loss
yeah.
back. There are sometimes when you can justify it, but this is like high level risk management type
Oh, yeah,
stuff
yeah.
where your new traders. I don't even really mess with that kind of stuff.
No, same.
There's almost no situation where a new trader would ever want to make a stop loss wider. That's usually fear. Anyway, so patience. When you're in a trade, you have to be patient. You have to let the trade develop. It's always nice when you enter a trade and it goes in your direction right away. I love that. I enter a trade on the daily, within 3 hours, it's hit my target.
Yeah.
Awesome. That's like one of the best scenarios. But realistically, most times that's not going to happen. Most times you're going to wait 2-3 days. A lot of times where a trade will go halfway to my target in 30 minutes, and then it will just go back to where it started, and it'll hang around there for like 2 days,
Yeah.
and then
Yeah.
slowly work its way down. And there are so many traders who, when they're in that situation, they're like, oh, it's gone back to my entry. Oh, I don't want to stay in this trade. It doesn't look like it's going to work out. And they'll exit the trade. But I find that you need to be patient. You need to hold on to that trade. But another way to look at it, and this is what one of my students does, is to have a timed stop loss. So how do I explain this? It's kind of hard to do. You have to have been trading for a while to do this. You have to have about 100 trades worth of data. So once you've recorded 100 trades, you can look at how long your average trade lasts before it hits target. So once you have that number, you can figure out a timed stop loss. So essentially, what that is uh, if you're trading on, let's say, the 30-minute chart, just for example, and the average time for you to hit your target is 1 hour. Again, this is just example numbers. You can set a time stop loss that whenever a trade's been open for 3 hours, you exit that trade. So that might seem impatient,
Yeah.
but it's not, because that's backed up by the
Data.
numbers.
Yeah.
Yeah. So you've done the trades, you've got the numbers, and now on average, when a trade lasts longer than 3 hours, it's gonna fail, go back and hit the stop loss. So on average, it makes sense to close trades that go over 3 hours. So that's a time stop loss. So it's good to be patient, but sometimes what appears to be a lack of patience is not really. It's
Yeah.
backed up
Yeah.
by numbers.
And I know
Yeah.
traders who have what they call kind of a, I want to say, not a feeler, something different, but they basically cut their losses short when they know it's not going to happen. So let's say they enter a trade and then the first candlestick's pulling back.
Mm,
Sometimes they found with data that this is wrong and that most of those trades are going to be loser in the end. They might cut their losses there, have
mm,
a smaller loss, but over time, these losses, they kind of accumulate to something smaller
mm.
instead of something bigger.
Yeah. So that would be an example,
Yeah.
essentially, of a timed stop loss. Yeah. Uh, it, I think being impatient is okay as long as it's backed up by the data.
Yeah.
So if you have the data on your trading to back it up, then it makes sense to be impatient. But if you're just kind of like winging it and just
Oh, yeah.
saying, "Oh, this doesn't feel right anymore. I'm going to jump out," that's bad. That's you being impatient, and you can't do that.
Yeah.
So I'm a fan of just saying, at least in your first year of trading, to just let your trades run, let them play out. Don't even look at them. If
Yeah.
you enter a trade and you step away and you just let the trade go, then you'll learn a lot about trading, because when you look back on that trade, you'll see you'll have actually, what I like to say is, your first year of trading is not about being profitable. It's about collecting data. That's what you do in your first year of trading. You collect data on your strategy, on yourself. And once you have all that data in your trading journal, you go over it, and then you can figure out these numbers. You can figure out what the right amount of time for your time stop loss is. So if you want to set a timed stop loss based on how long it takes for your trades to hit target, and uh, when your trades don't hit target, how long it is before. It's hard to explain this
Yeah.
without
Yeah. Yeah.
visuals,
Yeah.
but basically, once you have that data, you can then adapt your trading strategy to that data.
Yeah. That makes a lot of sense. Totally agree with that. We had a question here with very varying result, but what is a good average monthly return for Forex? Or I guess cryptos would be the same, but any indication on that?
Cryptos, the average monthly return is a lot higher,
Uh-huh.
uh, just because of the volatility.
Right.
But there's obviously a downside to that, because if you don't know what you're doing, that volatility could get you into trouble.
Hmm.
On Forex, it just depends. Whenever someone asks me what's a good monthly return, my answer always ends up being kind of vague, and it's not because I'm trying to be vague. It's just because it depends on a lot of factors. So, for example, if you want to trade 3 hours a week, that's possible, but you have to accept that your monthly return is going to be quite low because you're not trading much. If you want to trade 4 hours a day, your monthly return is generally going to be better because you're investing a lot of time into your trading. So also, it depends on how much you're willing to risk. If you're willing to risk 2% on each trade, which is pretty high in my opinion, but if you're willing to do that, then obviously your return is going to be higher. If you're only willing to risk 0.5% on each trade, your return is obviously going to be lower. So when someone asks me what's a good return in Forex, what return should you aim for? It depends on too many factors to give you. You would need to give me information about yourself. So you would need to give me information like, how many hours a day can you trade? What's your account size? How much of your account are you willing to risk on each trade? Um, even uh, basically all kinds of information like that. And then I'd be able to say to you, okay, for you, a good return is this. But there's no kind of like generic what's a good return. There's no like general answer that you can give to that. Some people can make 10% per month. It's possible, but it's a pretty good return. Some people can make 30% per month. Some people only want to make 2% per month. It just depends.
Yeah, it depends on
how
your.
long you want to trade, how much time you want to invest in it. And also the returns in Forex, it's not like a lot of people think Forex is like a monthly paycheck where you make X amount per month.
Yeah, and then you do it like every month.
Yeah,
after.
You can't do that.
No.
Like some months you're gonna make like 10%, some months you're gonna lose 10%, and it just like fluctuates. You're always looking at averages, and the averages are gonna change from person to person.
Yeah. And it also depends a lot, I guess, on your risk profile. Some people are willing to risk a lot more.
Yeah,
Like they don't care. They're comfortable with it. But I'm not comfortable with the same amount of risk that they have.
I'm not a big risker.
Yeah,
I don't like risk.
Yeah.
In life, I love risk, but in Forex, for some reason, I'm just not a risk taker. I'm very, very low risk. So my returns are generally not going to be as high as someone who's willing to take on a lot of risk. But obviously, on a losing streak, I'm going to lose a lot less than someone who's willing to take on a lot of risk. So I find that a lot of the times it just balances out in the end.
Yeah.
But it depends. There's so many factors when it comes to what the returns are.
Mm-hmm.
But yeah, if you want to email me the numbers I talked about, then I'll be happy to take a look at your numbers, and I'll tell you what you should be looking at in terms of returns.
Nice. We have a question here. I think this is going to be kind of general a little bit, but what do you think it takes to succeed in trading? Is learning from videos enough, or do you have to read books, or do you have to learn different things from where? This is this question right here.
My eyes are so bad.
So is learning from videos enough, or do you have to learn and read PDF to learn how to trade?
I wouldn't say like it just depends on the person too. Personally, for me, I'm the kind of person who learns from doing. I can't learn from videos or from reading, but there's a lot of people who can learn from videos. I think it depends a lot on the person. Learning from videos is probably the best way because they're very visual and you can see people do things. Learning from PDFs, sure. I mean, if you learn from reading, then go for it.
Yeah.
But I think with trading, most of the learning is from doing.
Yeah.
Once you trade, because trading is a lot of people don't believe this, but trading is not really about your strategy. Strategy is obviously important, but it's not only about your strategy. It's about your strategy, part of it, but then the other part is your mindset, psychology, how you think is very, very important. And then there's risk management, the mathematics side, the numbers side. So you can learn strategy from videos and from reading. You can learn the mathematics of trading from PDFs and from videos and from calculators and stuff like that. Like specific, not just a generic calculator. I mean, specific trading calculators. But the mental side of trading, the mindset, the psychology, you can't learn that just from a book.
No,
you have to learn that by doing.
Even if someone were to tell you like think like this and act like this, when you're in the market might not do the same thing.
Yeah.
So it might be completely different.
A lot of people panic when they're in a trade.
Yeah.
And it's natural to panic when you're in it. I started scalping I don't know how long ago it was, maybe a year and a half ago. I started scalping 5-minute charts. No, actually, maybe it's more than a year and a half ago. Maybe it's like 2 years ago. Anyway, it's not important how long ago it was. I'd been trading for like 15, 14 years when I started properly scalping. I was panicking while I was scalping 5-minute charts. Even with all those years of experience, I was still panicking while scalping 5-minute charts. And it took me a while to kind of like harden my mindset to be able to properly scalp 5-minute charts. And, you know, if someone like me who's been trading for so long is getting nervous trading a 5-minute chart, then someone who's brand new to trading and has never traded before, you're going to get really nervous. And there's no way to get over that nervousness unless you do it. You just got to do it. You got to take the trades, take the losses, and just keep going. And then you become a better trader.
And that nervousness probably only because it's kind of against your comfort zone. Like you're not comfortable
Yeah.
doing it, and so you're nervous.
Yeah,
But
I
over
was.
time, you probably decreases pretty fast.
Yeah. I was outside my comfort zone when I
Yeah.
was scalping. I mean, I'd been trading like primarily 8 hour, 12 hour charts for years and years and years. And all of a sudden, I'm down to 5 minute charts. Everything's happening so fast. You have to make a decision. Like, so on a daily chart, you have like 3, 4, 5, 6 hours to make a
Yeah.
decision. On a 5 minute chart, you have like sometimes 1 minute to
Yeah.
make a decision. So I
Right.
was like totally outside of my comfort zone and I was panicking, but I learned by doing. Just do it.
I think a lot of people want to hear about your training routine a little bit and your daily routine in general. So, what time of the day do you take to work, to trade? Is that going to vary, or is it always the same thing day after day?
Oh, my routine.
Yeah.
It just varies really. Depends what
Okay.
I'm doing that week. Generally speaking, I'll try to check my charts 3 times a day. So I'll check it usually when I wake up, then usually around 1 or 2, and then sometime in the evening. And when I check my charts, I go through I mean, if you look at my YouTube channel, you'll see me doing analysis once a week. And it's basically that exact same process I do on YouTube. But obviously on YouTube, it goes for like 20, 30 minutes because I'm talking through it. But when I'm doing it myself, it's usually just like a 5 minute thing, not even. So I'll open my charts. I'll do it very systematically. I have the watch list on the right, like on TradingView. I'll just go down the watch list. I'll look for anything that's forming, any interesting setups. If there's an interesting setup, I'll mark it. I'll move it to the top. Well, these days, since that new feature
Yeah.
we're talking
Just
about, I flag it.
Yeah. Yeah.
So I'll flag it, and then if there's a trade that I can take right away, I'll enter the trade. If not, when I come back a few hours later, I'll look at the flagged list and I'll see what's happening with those first, and I'll look at all the other ones to see if anything new is happening. So it's a pretty systematic approach. I check 3, 4 times a day sometimes. Just depends on how busy I am, what I'm doing, how lazy I am. Because some days I'm lazy. Just gonna grab my water.
And what about trading cryptos? Because then you're gonna trade on a lower time frame. Is it throughout the day? Do you look at a specific session, or is it?
Yeah, cool thing about cryptos is it's 24/7.
Uh-huh.
Like literally 24/7.
Yeah.
So and they're kind of always moving, but they tend to move more during the US times.
Okay.
So I try to do kind of like during US times when US people are awake. That's generally when I try to trade cryptos. So I'll just hop on and I'll just trade. It's basically session trading, but because it's there's no kind of official sessions on cryptos, it's more like a just come on anytime kind of thing. A few people I know trade cryptos at like stupid times, like 3 a.m. UK time on a Sunday morning, like, just random times because it's open 24/7. So yeah, it's a completely different market.
Interesting. Okay. That's a change. What is your opinion on signal services, and how should people pick a good one if they're gonna take one, of course?
I don't like signal services.
Okay.
I think, first of all, look, I'm sorry if I offend anyone, but I think signal services are for lazy people who can't be bothered to learn how to trade. I always say that. So if that offends you, I'm sorry. But I think if you're not going to learn how to trade, then you shouldn't be trading. You can't rely on a signal service. If I start giving you signals, right? What happens when I get hit by a bus?
Yeah.
Or when I just quit trading? What happens to you?
Or
you lose like your source of
yeah.
income.
Yeah.
I take a week off. Like anything can happen. Or I might say, I'm tired of charging $500 per month for signals. I want to take $5,000 per month from you now. Then all of a sudden you got to pay me $5,000 per month for my signals, or you got to find someone else to give you signals.
Yeah.
I just think signal services are lazy, and I just don't think you should do them. So yeah, I don't really have an opinion on how to find a good one, or my opinion is don't use them.
Yeah, pretty much the same way. That's why I ask you. Cool. We had a question here about, I think, let me see. Yeah, did you ever add to winning trades? Is it part of your plan to, let's say, when you have a good move in your favor, you add to your trade?
Generally no. Okay. Not in Forex. I've done that a bit in cryptos, but in crypto I don't really like it too much. I I don't really like adding to my winning trades because basically adding to a winning trade, all you're doing is averaging your entry higher or not higher. Like, let's say you're in a long trade,
Yeah.
you've entered at this price. When you add to it, you're just lifting up your entry price essentially because it just averages your entry higher. So I'm not a big fan of it.
Okay.
Not in Forex, but in cryptos, I tried it, but not my thing.
Nice.
I'm not saying there's anything wrong with it. Like,
Yeah.
if it's part of your
Fun.
trading plan, then that's fine. But for me personally, yeah, it's not something I do.
Cool. So where can people find you? Because you're launching a new site pretty soon. I think it's already launched. It's already online. So where can people find you if they want to connect with you, see what you're doing, and hopefully learn cryptos and forex?
Well, yeah, I have two websites. One's kind of like just well, it's been up for a month or so. It's got some awesome free education. It's like a free crypto site. It's called cryptos4Noobs.com. And then there's my other site, which has been up for like 10 years, Forex4Noobs.com.
Nice. Uh, yeah. What's the difference between giving money to a single service and instead of like putting it to a fund manager? Because there's a lot of these so-called fund managers online. They kind of they want you to give them your money. So what do you think about that? That's just the same thing.
I mean, it depends. Like fund managers, there's a lot of serious traders who manage funds, and if it's part of your investment portfolio, then it does make sense to go to a fund manager. But when you run into like a website where someone's like taking £100 or £200 from you and managing that, that's not really. I generally don't trust that.
Yeah.
If it's a proper investment fund where you're putting in your money, then it makes sense. Yeah.
Yeah, I would say this well if you trade, let's say yourself, and then you want to diversify,
Mm.
give something to someone else who's like credible. That could work. I would say this is working fine. Yeah, totally fun. And so we had a question here about what keeps you motivated to work daily? Like, what's your main motivation?
To work daily.
Yeah,
I don't work daily.
you either you work like 3 or 4 hours a week, right?
It depends. I
Okay.
mean, it depends on what kind of trading I'm doing. But yeah, I generally don't work daily. My motivation is to not work daily. Because I don't like living to work. So my motivation is essentially not to work daily. I work on myself daily.
Yeah.
Like I used to be like a pretty overweight when I moved to the UK, and over the last 2 years I've lost like 30, 40 kilos. Like my point is I work on myself daily. I work on improving my health, my mind. I read a lot. I learn new skills. I work on myself daily, but I don't work on businesses or stuff like that daily because I think there's more to life than that.
But so I get to your point. You want to do the work now so that you can get away from it and do what you want in the future.
Yeah,
which kind of makes sense. And yeah, that's what a lot of people are striving for. Makes a lot. Yeah. Cool. We have
why
a
is that
question.
one
This is
blue?
Ellie. Thank you. So Ellie had a I think sponsor chat, whatever.
Oh, right, cool.
So thank you, Ellie. A question here: how often do you change your support resistance level?
I used to do it every Sunday.
Nice.
So every Sunday I used to, before the market opens, I
Yeah.
used to adjust my support resistance areas.
Uh huh.
These days I just like do them as I go.
Okay.
So like every day when I open up my charts, if I see this one's not quite right anymore, then I'll just adjust it and move it down. So it's not a process that I don't set a specific time. I just kind of do it, just like move them up and down.
Okay. But so then, how do you decide when you have to move it? Is it as price makes new highs and new lows?
Yeah, when price, like let's say I have a support area here, it's been bouncing from that area for a few months, but then like all of a sudden it starts bouncing from slightly lower. Then I'll just like adjust it down.
Okay.
So I just adjust it to the most recent. My rule with support resistance areas is recent bounces are the most important. So the more recent a bounce, the more important that is for the more important that data is. So I'll move my area down or up to the most recent bounces.
Cool. And on that topic, I see many people struggling with that, where they kind of identify their zones, but then price makes, let's say, just a new low, but just a little bit lower than the previous low. So it's not like a new zone, but how do you deal with that? Do you change your zone? Do you adjust? Do you make like a rectangle to see like it's a bigger zone, or how does that work?
If it's only slightly lower, then I generally don't change it because
Okay.
all my support resistance, all of them are zones. They're not like a solid line. So uh, it's kind of hard to explain without a chart. But when you're looking at a chart and you place a support resistance area, you're not looking for price to bounce exactly from that line every time. It's going to bounce from that general area. So I use generally shaded areas on TradingView.
Mm-hmm.
It's kind of
Yeah.
like a rectangular
Yeah.
shaded area.
I do the
Mm.
same thing. So yeah.
Yeah. So when it starts poking out of the zone, if it's not poking too far out of the zone, I don't move it. But if it starts like if it stops respecting that support area or that resistance area, that's when I start adjusting and moving.
Cool. Love it. And as I think last two questions we'll do that, and then we'll conclude. Archer asks, "What book do you like on trading?"
Uh, I honestly don't read trading books. Um, Trading for me is what I do to make money. It's like it's work to me. So when I was learning to trade, I read several books on trading, but these days I don't really read on trading anymore. So when I was learning, there was that book by Dirk Dutoit, something hunting in lion country, bird hunting in lion country, lion hunting in bird country, something like that. South African dude. Um, and one of my all-time favorite books is Trading in the Zone by Mark.
Mark Douglas.
Yeah.
Yeah.
But generally speaking, yeah, I don't really read trading books that much.
So any other books like non-trading book that help you trade better or live better?
Uh, Discipline Equals Freedom by Jocko Willink. God, there's so many. I have to look at my phone to get my list of books. But actually, I can't go through my phone on on a thing. Well,
Right.
I'll post it somewhere.
Cool. Perfect. And we have a question here. So this is
Bird
Abby.
watching in lion country. That's it. Thanks.
Yeah, cool. We have a question from Abby asking about some tips to manage your time while trading, like when you're short on time. I created a PDF on that, a guide that I did a few weeks ago when I was in Taiwan. If you want to grab it, there's a video. I'll try to put the link below, but it's going to be somewhere on the site or here on YouTube. What any tip you have on that?
Managing your time.
Yeah.
Not really something I have a lot of free time, so
Uh-huh.
I don't want to answer a question where I don't want to give you an answer when I'm not like a
Yeah.
I don't like answering questions when I'm not an expert or not an expert. When I'm not well versed on the subject. If I
Okay.
answer that for you, I'm just going to be making stuff up. So I have a lot of free time, so I don't have to manage my time that well in trading.
Yeah, and let's finish with that. Some people want to get to a point where they have people investing in them. Either
Mm.
they either want to manage money or trade
Mm.
for other people. What do you think they need to do to get to that point?
A lot of my students do this and
Yeah.
have wanted to do this. I found that the best thing to do is have a 1 year of a trading record of 1 year, get it verified by an accountant. Then you can start emailing managed fund companies. Just go online, find the companies. It's easy to find them. Just Google, and then just email them. And you might email 100 of these companies with your trading record, and maybe like one of them or two of them are going to respond, but you just have to do it. You just have to
Yeah.
email
Part of it.
them,
Yeah.
and someone's going to. I don't do that. I tried managing money like earlier in my career. I hated it. Oh my god, I hated it so much. People would just like constantly message me saying,
Yeah.
"Oh, why don't you take this trade?" I'm like, "Oh, well, that's not part of my trading strategy." Anyway, that's not the point. When it's just message all these companies, someone's going to be interested in you, especially if you have a good expectancy. Um, Expectancy is a risk management term that if you're looking to manage funds, you should know what expectancy is.
Yeah.
If you have a good expectancy, then they're going to respond. At least if you message 100, at least one or two of them are going to
Yeah.
respond.
And it's always a game of numbers.
Yeah.
Which this is the example. Perfect. Yeah.
And message manage funds in every country, because these days a lot of them allow you to trade from home.
Yeah.
So you can trade from Australia for one of my students, just a good example, trades from Australia for a managed fund in Germany. So, this is like across like pretty much opposite sides of the planet, but message managed funds in every country in the world that you want to work for. And yeah, someone's going to respond.
Yeah, makes a lot of sense. So thank you, Nick, for the interview. I really appreciate it. And I think people got a lot of value. Maybe one last question. We keep going forward, but any software you would recommend for trade journaling or any method you have yourself?
Yeah, I just use Excel. That's how I journal my trades. There is some software out there. There's one I wanted to use called God, I can't remember the name. I'm so bad with remembering names.
Edgewonk?
Yeah, that's the
There
one.
you go. Okay.
I looked at them and I was like, oh, this looks cool. I might try it out. But I think a lot of I haven't tried Edgewonk yet, so
Okay.
correct me if I'm wrong. A lot of the software out there for trading journals, they skip one of the most important aspects of a trading journal, which is the mindset part of things.
Yeah.
So in my trading journal, which I have on Excel, which you can get on my website, it's like a free Excel doc I share. I have things like basically mindset questions. How do you feel about this trade? Are you confident about this trade? How do you feel at this moment in general? And those questions might seem tedious and annoying to fill out, but you'll find that once you have like 100 or 200 trades recorded, those questions that relate to mindset really help you change your strategy. So you might find that when you're not confident, so you've had this column where you ask yourself, do I feel confident about this trade? Yes or no. You might find that when you don't feel confident about a trade, that trade is likely to fail. And once you've recorded that data, then you can track that and you can adapt your strategy based on that data. So I feel a lot of trading journals miss that
Yeah.
vital section about mindset and psychology. So that's why I use Excel. Edgewonk might be different.
Yeah, you have an option in Edgewonk where you can put some like a custom question that you answer
Right.
over time. That can work, and we'll put the link below for Edgewonk anyway after. I think I have a discount code you guys can use if you're interested in checking it out, and we'll put that below after. But yeah, any method you have that works for you, that's the best one, of course. Yeah.
Yeah.
So thank you, Nick. I appreciate it.
Yep. Thank
And
you.
we'll wrap this up. Thanks guys for watching. Give a like if you enjoyed the video today. We might do a meetup in London. We'll see. And I'll catch you guys pretty soon.